Hey traders, Akil Stokes here of Trade Empowered, and thank you once again for joining me for this week's live room weekend review video. As always, I appreciate the comments and the feedback I've been getting from these videos. It really allows me to know that I'm doing a good job with this, and gives me the energy to pump these videos out, each week. Now, this week in the syndicate, not really too much to talk about. We're coming off a really big week last week, and well, this week was kind of just normal. I put out a few videos. We had a few winners, a few losers, and well, a few trades that never got triggered. So really, not much to discuss. So I want to spend the time talking about really the steps we've taken in the live room over the last 2 weeks as far as our education has gone. And for those of you that are in my live room or have joined me in my live room, in the past, you know that I trade a multitude of styles. I'm counter trend, trend continuation, simple patterns, ABCDs, double tops, double bottoms, more advanced patterns like 2618s, Gartleys, ciphers, butterflies, bats, structure-based trades, trades on the range bars. There's a lot that goes on, and it's not uncommon for a trader to come in the room and really get lost, and especially at the point we're at right now, my training course with the 12-week transformation, you guys are now, or the traders in the course are now, learning a lot of techniques and a lot of strategies, and they're at the point where they know the rules of engagement for each of these strategies as an individual, but are having problems really deciding, when they're watching the markets live day in and day out, which trades are worth taking, which trades aren't worth taking, and I talk a lot about filters. And that prompted me last week to bring up something called the CTS score, or the Combined Technical Scoring System. And actually, a trader sent me an email saying, "Hey, I'd like to know more about it." Sent it to Jason as well, and Jason did a wonderful private client group session on it last week, and it was actually free, open up to the public. And well, if you didn't get a chance to be involved in that, then you really missed out. But the good thing about that CTS score is because it just makes everything we know a lot more simpler. Um, it's a I won't get into details about it, but it's basically a checklist that tells you when a trade is worth taking and when a trade isn't worth taking, and the criteria for that is really based off what you use in your everyday analysis. And coming off that private client group session on Wednesday, and the traders having that new knowledge, I think we made major strides in the live room. It's really starting to come together. The glue is there, and again, trading is becoming simple. And there are many individuals out there that want to make trading seem like it's rocket science, and it's you got to have a degree in economics, you got to be a genius at math, you got to have this much experience or work for a firm, and that's really not the case. Technical analysis is something you can pick up in no time, in a matter of months, and you can probably master it in less than a year. The hard part about trading is really the discipline, the psychology, and all the stuff like that. And that's what we're really trying to preach in the live room, again, by showing examples day in, day out, and me personally providing a good example to traders of how to mentally stay tough when the markets are well going against you, and how to stay calm, relaxed, and consistent when the markets are going your way. So again, a great week, one of the most educational weeks that I've had in the live room since I've been doing this, for over a year now, and it's makes me pretty happy just to see where we're coming as a group, and I'm very excited for the future. Um, Now, before I get into the flashbacks of our live room sessions this week, I do want to share portions of an email I got earlier this week, and it was an email from one of our live room members who was, like most of us out there, is going through a time in their trading where they're really struggling. And the email does get a little personal, and out of respect, I'm not going to share the whole thing, but there were a few statements in there that really stood out that let me know that, hey, this trader, despite the struggles they're going through, they're going to be successful. And I can tell that by the way they worded certain parts. So I'll be right back and bring you the highlights, I guess, highlights. I'll bring you portions of that email that really stood out to me. Okay, so I want to give you the highlights of this email. I'm going to try and keep it short for time's sake, but I feel it's really important because, well, Many of you are probably feeling the exact same way. And this trader said, "Hey, Akil, hope you're doing great this morning. I am writing you this email because I'm having some personal thoughts and issues with my trading. I've been following you and Jason for almost a year now and consider you to be like my mentor regarding FX trading. Since a year, I haven't been profitable. Yes, I've had some positive months, but my drawdowns are bigger than my losses. My risk reward ratio is really good, but my winning percentage is horrible. It turns around 30% winning and 70% losing. I don't mind losing, it's a part of the trading business. It seems like every time I stay out of the market, there are winning trades, and every time I'm involved in a trade, it goes against me. I'm serious. This is real. The best example is this morning, a beautiful 26.18 on Aussie dollar 15 minute. Boom, busted. And this happens to me all the time. Yet when I stay out of the market, well, it's the big winner of 300 pips that I miss. I have my rules written. I have my trading plan in order. I know what I should do or take action on, but nothing seems to work. I'm having some good analysis, but when I have to pull the trigger, either I'm staying out of the trade or I'm getting stopped out before reverse. I know it's called discipline, and I've been working on it like a madman. Um, and here's the part I like best. It's tough, but I have the feeling deep inside myself that I can do it. I know. I know I love doing this, waking up in the morning, turning on my charts, and analyzing. I want to do this all my life, not because of the money, but because I enjoy it. With your help and hard work, dedication, I know I can do this, and I will. That's why one day, Akil, I'll write you back. It could be 3 months, 6 months, or a year. I don't care. But I will write you back telling you how I became from struggling rookie FX trader to profitable FX trader. Thank you. Now, like I said, a lot of you out there are feeling the same way, and this trader's at the point where it seems like the analysis is good. They've got a grasp of how to read a chart. They've got a trading plan with rules of engagement and strict rules to follow. The problem is two things. First of all, it's taking every trade, and the trader admitted that. You know, he said that whenever I miss a trade, that ends up being the big winner, and it's discipline. You got to take every trade. And secondly, it's really just making the small mistakes. And I was in a similar boat not too long ago, where I knew what I was doing, but my results just weren't up to par with, well, how I felt my skills were. And it really took me eliminating those very small mistakes one by one, and getting a little bit better, that made the difference. And the part I like best is the end. It's the determination. We talk about 80% of traders fail, or 80% of traders aren't successful. That's not because they're not good. It's really because they fail before they give themselves the chance to succeed. Stuff gets hard. It's not working the way they want right away, and they say, I'm going to move on to the next get rich quick scheme, instead of working through the hardships and really becoming successful. So I have no doubt that this trader is going to become successful. Not because of the skill level, not because I trust that the mistakes are going to be fixed, but there's a determination factor there. This trader wants to get good, and I'm a firm believer that if you want something hard enough, you will get it. So wanted to share that, and I hope that touches some of you out there and lets you know that, hey, you're not the only one. You're definitely not the only one. There are a lot of others out there like you, and really just don't give up. So let's take a flashback with this week's live room sessions, and show you a little bit of what we did this week in the live room. Looking at Euro dollar 15-minute chart, we actually have a pretty cool setup here. We have two patterns. We have a bat pattern that's on our radar down at 130.54, and we actually have a butterfly pattern completing at the same area, completing in a zone between 130.58 and 130.52. Also, we talked about this level on the higher time frame. We talked about an aggressive C for these trades, and really building a case for entry on these aggressive Cs. It's been a popular subject in the live room, and as well as in my training course. And although I warned traders about the cons of it, there are a lot of pros to taking this type of trade. So we're really working on building a strategy of how to enter a good or a quality aggressive C. And one of the things we talked about in the live room was, well, going out to higher time frame and using time frame confirmation. And in this case, well, if we go out to our 60-minute chart, you can see we have some pretty good confirmation on this aggressive C with a structure level here in blue. and also a 382 retracement from our most recent swing high to swing low. So if you're looking to build a case for entry, if you're looking to use that CTS score you just learned about, you can start doing so with this higher time frame confirmation, Fibonacci structure, and whatnot. So the two trades we took today were, we'll start off with Euro Yen. I actually took a loser on this. I entered an ABCD pattern right down here. We had an ABCD pattern that came in at a double bottom, RSI diversion, structure, everything I needed. And guess what? Well, the market just ran right through it. Fortunately, there were some traders in the room that picked this up. We had a cipher pattern completion, X to A to B, B to C, CD right down here at 129.94, which a lot of traders got involved with. Unfortunately, I couldn't. The market closed, or price action closed, a single tick above my 1414, which makes the trade invalid for me. So, not for me, but makes the trade invalid. So, unfortunately, I couldn't enter. But again, what I told the traders in the room is check your data. Depending on your data provider, you may be, off by 1 or 2 ticks from mine. And if it works for you, buy it up. And this ended up being a very great trade. Not because it spiked down. Obviously, rolling our Fibonacci's, we had to adjust targets. But mentally, and as far as a trading psychology goes, this was a great test for those traders to enter an advanced pattern, some of them for the first time, have it go against you, have it come down and test structure, put you through all the emotions of, oh man, it's a big old red candle, a big old black candle shooting down, I'm going to lose. What did I do wrong? I knew I shouldn't have entered. I'm a bad trader. To have it get down that low, trust your stops, which are below X, and have the market turn around and give you a 2-target winner. And a lot of happy traders in the room today. Not because of the winners. We win. Not all the time, but we do win, so they're used to that. But more so because they toughed it out and they were able to stay in a trade that normally they would have moved targets or moved stops or made some type of rookie trader mistake. So we gave a big round of applause for that, and of course, rang that cash register. Aside from that, we had one more trade earlier, another cipher pattern on pound yen. You can see a small one completed right down here at 152.73. Came up, got quick target ones hit for maybe 15 pips or something, 12 pips, something small. And then we rolled down to get our trail position stopped out for break even. So all in all, not a bad day, not a very busy day, but we did attack the markets. We got a lot of education done in the live room, especially with going over the CTS system, which Jason taught in Wednesday's private client group meeting. And we'll see what Friday holds for us. So Friday ended just how we like to end every week, with a bang. We had a very good trading day. We actually went 3 for 3 on trades today. We had a winner on pound dollar, a winner on euro yen, and a winner on pound yen. And today was a very busy day in the market, a lot of movement. We did a heck of a lot of analysis. Most of that analysis never completed. We spent a good half an hour on Aussie just to see the market come within 1 tick of getting us entered. Just stopped out for break even on trail stops here on pound dollar. We saw euro dollar do the same thing. We identified a level, but was never able to get a trade entry. But we did get a few. We caught a nice little cipher pattern here in the range bar charts. And the range bars is where most of our work was done today. Nice little cipher pattern that you see rolled over. We caught another one earlier. Pound yen, we also did a lot of analysis. We had a smaller cipher pattern. Actually complete. We had a smaller Gartley pattern complete on the way down. We got involved in the Gartley pattern on the way down, rode it all the way down for target ones and target 2 winners, and then actually got filled on a second Gartley pattern right here. Now I actually missed this order by the time I got my analysis done, after accidentally deleting my charts. By the time I got my analysis done, market had pushed past and didn't give me the chance to enter. But a few traders in the room did get a chance to enter this, and what ended up happening is, well, they took about 40 pips on the way down with the target 1 and target 2 winners of the smaller trade we entered on the 5 range bar chart, and then end up catching this for about 40 pips on the way up as well. So we ended with a bang, where we brought ourselves back up to a win percentage where we should be, and gave a great example of why you need to be alert in the markets. Because, well, On the 5 minute charts, on the range bar charts, these things move pretty quick, and you got to get ahead of the markets. You got to get into OODA loop. You got to get your analysis done. You got to be predictive and not reactive. That way you can catch the move and know exactly what you're going to do before it happens. Then it's just seeing if the market's going to give you what you're looking for, and of course having the guts to pull the trigger, which is hard for many people. So as always, appreciate you guys joining me for this week's video, and plan your trade, trade your plan. I'll see you in the live room.